I think if you look at the debt market in China, we are starting to see some defaults coming through. But if you look at the size of what's been happening so far, they seems to be relatively contained. I think where we are more concerned is how does that impact some of the banks or insurance companies that invest in this bonds, and relative to that, in terms of their overall investment, it seems okay. But I think we got to see whether this specific case in some of the defaults are going to result in some systematic risks, which at the current point, we don't think that's the case. So we are still watching on the sidelines from that perspective.
Sure. But does that increase your own assessment of China as an investment market at this stage? Because we're seeing some scrutiny in the debt market, we're seeing some sort of pain in the debt market right now. And on the other hand, as far as techs are concerned, which have been the darling for investors here in Asia, again, there has been a step up in terms of regulatory environment changing for the market, for the sector as a whole. Does that come across as a concern for you?
I think we remain broadly constructive on the Chinese market as a whole, and I think the reason behind that, if you look at the way that China has managed through the COVID situation, it is the first in and it's the first out. And if you look at the economic activity or the industrial activity in China, it has actually gone back up in terms of recovery as well. So we are seeing good numbers coming out of industrial activity, and that seems to tell us that economic recovery is on track. And if you look at retail consumption as well, that's recovering quite nicely. So from that perspective, fundamentally, I think we are quite positive on China.
We have already seen a pretty good run, though, Pruksa, in many of these sectors you're highlighting. So if you want to get additional upside, I mean, what looks most attractive to you?
I think we remain very focused on the long-term structural growth, on where we see pockets of long-term structural growth. So domestic consumption, which I think is something that we are invested in for the very long term, continues to be a very attractive place to invest in. And that's really because, especially given the current COVID situation externally, you have to rely more on domestic consumption. And I think that's holding up really well in China. If you look at what has been communicated with regard to the 14th five-year plan, domestic consumption and boosting domestic consumption continues to be the long-term plan for the government as part of their internal circulation. So we think that that remains to be a very attractive area, as well as tourism and domestic spending continues to recover.